Hello, my name is Obafemi Oyewumi. I welcome you all to Taxation, Theory and Management class. It's a course for postgraduate diploma students of the Department of Accounting, University of Lagos. Today we are looking at nature of tax in Nigeria. Learning objectives are define and distinguish between tax and taxation, understand the concept of tax, appreciate the objectives of taxation, understand the canons of taxation in Nigeria, categorization of taxes, and the advantages and disadvantages. I would like you to subscribe to my YouTube channel and, of course, like it. And if you have any comments at the end of the class, please feel free to put your comment there or ask any questions as much as possible. I believe that at the end of the day, I'll be able to attend to them as much as possible. Now, let's go on. Let's look at the concept of tax. Tax is a compulsory levy imposed by the government through its agents on income, consumption, production of goods and services to achieve some developmental goals. We're saying here that governments of nations have goals, objectives, and things that they want to accomplish, for the purpose of the benefiting the citizens. And as a result, they require funds to be able to provide all the different amenities, all the different, infrastructure for the purpose of satisfying, their teeming population. So one of the avenues is by levying taxes, on the people, and of course, companies profits as much as possible. So we're looking at tax as compulsory levy that the government of the country or its appropriate agent imposes on taxable persons, individuals, businesses, and other bodies to allow government to provide money needed for the running of the government and to achieve other macroeconomic objectives and fiscal policies of the government. So, what we talk about the concept of tax is just what I just explained to you. In as much as facilities are meant to be provided, amenities are meant to be provided, even for the people. And of course, no individuals can actually bring out money to be able to fund, this project. It means that government will have to tax people. They pay money into a particular coffer, the coffers of the government, out of which they be able to provide facilities such as roads, water, power for the entire, populace. And as a result, everybody is required to pay taxes to the government because that's one of the ways by which government can generate revenue in order to meet all these goals, all these amenities as much as possible. So, when we talk about, let's look at the different concept now of tax. Number one, that is a compulsory contribution. Okay, so even though tax is paid willingly, there is a sense of compulsion when it comes to payment of tax. So it means that no one can refuse to pay tax. On a general grant, everybody just have to pay tax, irrespective of the benefits that you derive from it or otherwise. Number two, the fact that tax is a contribution implies that everybody just have to make a sacrifice. There's a manner that is sacrificial. You just have to make a way. You just have to provide your own portion, so that everybody will be able to benefit at the end of the day. Okay, from the tax that you are paying. Number three, tax payment is a personal obligation. We're saying here that it is a personal responsibility for each taxpayer to pay, their taxes as much as possible. So the personal obligation is to contribute to the state in order for them to apply and give to the money to be able to satisfy some needs of the government. So a tax is also levied according to certain legal requirements. What I was saying here, we say that there is no every tax is backed up by law, backed up by regulations, and so that means that nobody will just wake up one morning and say, come and pay this particular tax. Okay. Number five is that the amount of tax is not fixed with reference to the exact benefit that every taxpayer receives. So you're not going to pay tax based on the benefit that you receive per person. No, it's not going to be like that. So when you pay tax, everybody money goes to a particular cost of the government, out of which they'll be able to provide the amenities required. Now let's look at taxation. What is taxation? We're saying here that tax and taxation are not the same. Okay, they have the same coloration, they are different in meaning. What does that mean? It means that taxation is a system, while tax is the product. Okay, the art of levying taxes is called taxation. So taxation can be referred to as methods, principles, procedures, and processes of collecting and administering taxes on her people. Okay, that's talking about government now. Taxation is a concept and science of imposing tax on citizens. Taxation plays a pivotal role within the concept of generating revenue for the government while enabling it to provide citizens with welfare goods and services. That's taxation. Let's look at the objectives of taxation. One, the first objective and the primary objective is to raise revenue to the government for them to be able to meet their huge, public expenditure. Number two is for them to stimulate economic, development. And what are we saying here? Every government desires to develop, the country or their nation. As a result, they can use tax as a particular avenue by which such economic development is achieved. Okay, for example, if you look at what Nigeria did in the year 2019 and 2020, they came up with finance act saying that okay, if your income or your turnover is between 1 and 25 million, you are not expected to pay taxes. Okay, then it's after 25 million to 100 million, then you pay tax on based on that. You're only going to pay 20% of your tax. Okay, so what I'm saying here is that look, when you can use tax as a tool, to stimulate development. By so doing, it's expected that small scale industries, small scale companies will be able to scale up their activities and make enough money before they can begin to pay their respective taxes. Okay, number three is to redistribute income and wealth in order to reduce inequality. This is done by taxing the rich at a higher rate than the poor, or by introducing a system of progressive taxation. Number four, the management and stability of the country's economy. Okay, it's the responsibility of the government to be able to manage and stabilize its own economy. And what do? They make sure that there's enough employment for its population, qualified employees. There is also engagement of the citizens, price stability, and then control of inflation. They can use taxation as a means of actually achieving management and stability of the country's economy. Canons of taxation. When we talk about canons of taxation, it refers to characteristics or qualities which a good tax system should possess. The canon of taxation was first developed by Adam Smith in 1770. So it's expected that some qualities just have to be, processed, or some characteristics just have to be there in some, in a good tax system, so that it will be able to achieve the purpose of which, is being introduced into the economy. Now, the canons of taxation are one, canon of certainty; two, convenience; three, simplicity; four, equality or equity; and then last one is economy. Now let's look at certainty. When we talk about certainty, we're saying here that an individual should know the amount of taxes to pay, and the type of taxes to pay, and the time to pay, and then the revenue authority to pay the taxes. So everything should be certain. There should be no ambiguity or arbitrariness, when it comes to taxes. All right. So let's look at what it entails. At the end of the day, it entails that taxes to be paid must be known to the taxpayers. Not only that, the tax levying authority should also be aware of the tax to be paid. Okay, the taxpayers should also know when each tax becomes due. Taxpayers should know where to pay taxes to. Taxpayers should know how much taxes are to be paid, and then the base of taxes should also be known, and the rate of tax applicable and relevant that should also be known. So everything must be known and must be certain. Number two, canon of convenience is saying that look, when it comes to payment of taxes and the collection of taxes, it must be convenient. Convenient to the taxpayers and convenient to the authorities that are in charge. Okay, it must be convenient. I don't have to say I want to pay for withholding tax and I have to struggle to pay. It must be convenient to me, it must be convenient to the person that's also collecting it. And that is why today we have a lot of ICT thing coming into play. Okay, so everything is now being digitalized. Everything is done electronically. Most is some of the tax authorities and the operations. Okay, so it must be convenient, for everybody, convenient to the taxpayer and convenient to those that are saddled with responsibility of also collecting, the money. Okay, number three, canon of simplicity. It means that the system will be simple enough for you and I to be able to determine what we are going to pay. Canon of simplicity says that, the ability of the taxpayer to understand the tax system must be, must be straightforward. The ability must be there. I don't have to begin to call on tax consultant to help me to do this or that when it comes to my, payment of taxes. Okay, so this means entails that every tax system must be coherent, simple, and intelligible to the people so that taxpayer is able to calculate it. Okay, tax system must be plain, it must be simple to understand, it must be devoid of complexity, it must be devoid of, difficulty, because once you bring that into place, there will be room, creating room for, corruption at the end of the day. So it must be simple enough for everybody to understand. What about it? The next one is equality. Okay, it means that everybody should pay taxes based on what he or she is earning. Simple. This suggests that taxes should be allocated among individuals and, in a reasonable manner. Okay, and as we said, the subject of every state ought to contribute towards the support of the government as nearly as possible in proportion to their respective ability. So I must have the ability to pay. So the people in the higher bracket, earning bracket should pay more, while in those with the lower quality products should pay less. So we must not pay, the same thing. Okay. Then the last one is canon of economy. Economy talks about the cost of, collecting, taxes on behalf of the government. It means that I must not run at a loss. Government must not run at a loss in the process of collecting, assessing, and collecting taxes. Okay, so the cost of collection must not be in excess of the revenue generated. So that talks about economy. So it must be lower. The cost of collecting tax, administering and collecting tax must be relatively lower than the amount of taxes collected. Okay, let's go to classification of Nigerian, tax. The first uh, classification is based on tax base. Okay, we're saying that tax can be classified according to what is being taxed. So in this case, the bases are capital, income, and consumption. When you sell capital goods, you are meant to pay what is called capital gain tax. And then when you buy and you make purchases in the public place in the market, you pay value added tax. So you pay on consumption, you pay on income, you pay tax, on, when you deal with capital, transactions. All right. So the second one is classification based on burden. Okay, here we're talking about who is the burden bearer here. Who is bearing the burden? So we have two. The first one is direct taxes, and then the other one is indirect taxes. We also talk about the advantages and disadvantages along the line. Direct taxes. These are imposed directly on the income of individuals and companies. The burden of tax is borne by the taxpayer. It cannot be shifted to another person. So, for example, personal income tax is borne by an individual at the end of every month. Company income tax, petroleum income tax, and capital gains, they are borne by the different companies. When they make profit, appropriate profit, they pay all these taxes based on, the income that they make. So that's direct, to them. The merits are also there. That's talking about the advantages. Okay, the first one is equitable. So if it is equitable, direct taxes are quite equitable. It is based, you pay taxes based on what you earn. You earn higher profit, then you pay higher taxes. You earn low, maybe small amount of money or profit or income, you also pay some that's commensurate with whatever it is that you earn. Okay, that's what it means. Okay, for example, in Nigeria today, we have companies that surcharge 20% of their income tax as income tax, and then 30% of their profit as income tax, depending on the level that you fall into. And like I said earlier on, between 1 and 25 million, you don't pay. 25 million to 100 million, you pay 20%, and then instead of 100 million, you pay 30% of their profit. Okay, and then when it comes to income tax, when it comes to individual taxes, okay, it is also graduated like that. So if you are the higher echelon of people making so much money, they pay higher. So it's quite equitable. Number two, the distribution of income. Okay, so it is quite progressive, can be used as instrument therefore to reduce inequality in the distribution of income and wealth. So the rich people are taxed heavily, while those that are poor of course also pay at a lower amount of taxes. Then number three is certainty. Okay, the amount that government expects to realize from direct taxes can be estimated in advance and with a reasonable degree of accuracy. So you can say that okay, you're going to earn so much from income tax, you're going to earn so much from payee and and the likes. Okay, so because you know the time to pay and where to pay to, so there's a particular amount of money to pay. It's also relatively fixed. Then control of inflation is the next one. So unlike indirect taxes, which is added to the prices, thereby increasing inflation, direct taxes can reduce disposable income, so it can be used to reduce, bring down inflation, because when this disposable income is lower, one way or the other is made to be, to come down, there will be less money available for people to buy goods, so inflation will come down. So it depends on whatever it is that the government wants to achieve. Civil consciousness. So every taxpayer know that I just have to pay so long as I earn money. It's also economical. Direct tax, for example, does not cost so much. Okay, pay as you earn does not cost so much at the end of every month. You are expected to pay your pay as you earn, so it does not cost so much for them to collect. Disadvantages is quite unpopular. It's quite unpopular because nobody wants to bear such a burden, of paying taxes. It's not popular. What I know at all, especially in this part of the world, where people feel that the money that they're paying is not commensurate with what they're getting. So it's not popular. So as much as possible, people don't are not always happy when it comes to payment of direct taxes. Number two is also inconvenience. Okay, because somehow you have to take the money out of what you earned. Okay, it's unlike when you just go to the market to buy. You don't even know when you are paying it. But this time around, you know that you see it in your payroll. For example, you see it in your pay slip. You see it when you calculate your tax at the end of the year for companies. So it's not convenient, always convenient. Tax evasion is also, there. The rate of evasion is high. This is not evasion. Evasion is also, high. Okay. Now, apart from payee, businessmen and women, as much as possible, they are not willing to always come forward to declare the true picture because they bear so much burden when it comes to payment of taxes. Okay, number three is disincentive to work. Okay, the progressive system of taxation, where higher income tax is taxed, at a higher rate, and at a higher rate, people may be discouraged from working harder since they know that the more they earn, the larger proportion of their income will go into the coffers of the government. Might also act as a disincentive to investment. Okay, where people are paying so much money as taxes, they might not want to just increase their investment in other businesses in the country. Okay, let's go to the second part, which is indirect taxes. Indirect taxes. These are taxes imposed on goods and services and are sometimes referred to as expenditure taxes. The burden of an indirect tax can be shifted wholly or partly from the taxpayer to another person, depending on the elasticity point facing the item. What are we saying here? Indirect taxes are paid when consumption of goods and services you know, is on the burner. Okay, when you consume, when you buy, you pay taxes on them. Here you have tax like VAT, for example. You have excise duties, you have import duties, you have export duties. These are taxes that are borne by the virtue of the fact that you make purchases in the open market. Okay, now what are the advantages? Number one, wider tax base. It means that everybody who is buying one thing or that is paying, indirect taxes. And that's the truth. They are paying indirectly. It's only when you check your the slip given to you at the point of purchase that you see that there is a particular tax that has been added to it. So everybody pays. so it has a wider tax base. Number two, it's also difficult to evade. The only reason why you'll be able to avoid indirect taxes is when you don't buy anything at all. When you don't make any purchases, then you don't incur, you don't pay any liability, as relating to tax. All right, and nobody can actually do that. Everybody must buy one thing or the other. So it's also convenient. Okay, so you pay whenever you don't go back and say, well, where's my tax, where's my tax? You don't. So it's convenient. Once you just pay, it's there, you go, it goes. Okay, and then number four rather, is beneficial social effects. Okay, indirect taxes can be imposed on certain goods considered to be harmful, to raise their prices and discourage people from consuming them. So goods like, if you want to discourage alcohol, for example, cigarettes, for example, you increase their taxes, so people will be discouraged. So there's a social benefit that comes, from indirect taxes. There's of course also equitable as much as possible. It's also equitable. Indirect tax can be made to be more equitable by imposing higher rates of tax on goods and services consumed mostly by the rich. So luxury goods are meant, when you buy luxury goods, definitely what do? You pay more. Okay, the government can now increase the tax coming from, luxury goods, while they reduce the one for basic, human consumption. Then disadvantages, we come back to another part of it, and inequality. Okay, what we're saying is that there are some goods that we, both the rich and the poor, they consume in the market, and they pay the same amount of money. For example, if somebody wants to buy a carton of biscuits costing 1,000 naira, he's going to pay a VAT of 7 to 7.5. Okay, and how much would that be? That's 75. So if a rich man wants to buy the same thing, he buys it at the same amount and he pays the same amount. So there's an element of inequality in these regards. What about inflation? Indirect taxes are usually added to the price of goods and services, so they end up increasing the price of such goods and services. So inflation is getting higher, by the day, by reason of, indirect taxes. Uncertainty. Government cannot, expeditiously calculate the amount of money that they'll be earning from indirect taxes, unlike indirect taxes, because you can't tell whether people will buy those goods, or otherwise. So you cannot tell. As a result, so it's not certain. They cannot calculate it. Then the next one is loss of revenue. Okay, there are so many intermediaries that are involved in collection of indirect taxes. And of course, what happens in most cases, people will collect and they will not remit to the government. So there's a loss of revenue. But the next one is tax evasion. Okay, some indirect taxes easily evaded. How? They're evaded because a lot of people are doing businesses that are not, and they are not registered. They're not registered with CAC. Some of those that are even registered with CAC, at times they registered and they're doing businesses, but they are not registered with FRS, the Federal Revenue Service. So it means that they are making money, and of course there's no record to show that they're making, so there is also tax, innovation. We have come to the end of this particular class, even right now, and I hope that you have learned one or two things concerning the nature of taxes in Nigeria. By the next class, we'll be going further to talk about the history of taxation in Nigeria. Thank you very much for joining me. God bless you. Bye bye.